Welcome back to Crypto Unlocked. I'm your host, Crypto Daryl. Every time the world starts to calm down, Bitcoin finds a way to remind everyone that its heartbeat is still the digital revolution. After weeks of consolidation and anxiety, Bitcoin just ripped back above $113,000. And the timing couldn't be more poetic. You've got whispers of Federal Reserve cut rate, trade optimism surrounding a Trump XI summit, and a wave of investors who swore they were done with crypto until suddenly it came crawling back into the market. This isn't just a technical bounce, it's a psychological one. The same fear that drove people out at 95,000 is now forcing them to chase back at 113,000. And that's classic Bitcoin psychology. Punish the hesitation and reward the conviction. When you zoom out, you realize how everything happening in the world is quietly aligning for another crypto expansion phase. The Fed softening its tone, geopolitical tensions easing temporarily, and Wall Street's risk appetite returning are all bullish catalysts. You can almost feel the shift in the air, that moment when uncertainty flips into quiet confidence. It's not euphoria yet. It's the kind of calm before the storm that experienced traders recognize as the early stage of momentum. And this time, the spotlight isn't just on Bitcoin, it's actually widening. XRP is suddenly stealing some of the spotlight after months of grinding between $1.80 and $2.20. XRP has now crossed $2.60, and the reason goes deeper than just speculation. Institutional interest is building fast around the idea of an XRP exchange-traded fund. Ripple's launch of Ripple Prime, a dedicated structure aimed at institutional liquidity management, is being viewed as the bridge that could make an ETF product viable. If that happens, it would mark as one of the biggest institutional turning points for altcoins in years. Imagine Bitcoin ETFs opening the door for mainstream and the XRP ETFs giving traditional finance a regulated way to play cross-border payments. That's how adoption compounds. Bitcoin sets the standard, altcoins industrialize it. But here's the fascinating part. Even with prices climbing, market sentiment is still stuck in fear. Think about it. Bitcoin at 113,000, XRP breaking out, yet the overall crypto fear and greed index can't even clear neutral. That disconnect is gold for investors. Historically, the most profitable accumulation periods have always been when the data looks strong, but emotions still lag behind. It means that people don't believe the rally yet, and disbelief rallies are the most powerful ones because they climb the wall of doubt. Everyone's waiting for confirmation for the all-clear signal. And by the time that comes, prices are usually 40% higher. If you've been around long enough, you've seen this movie before. Bitcoin does this every cycle. It breaks out when the crowd hesitates. At the same time, Ethereum's Vitalik just dropped a rare warning that could reshape how developers and investors think about the blockchain security. In a recent post, Vitalik highlighted what he called a blind spot in validator operations, specifically around the growing reliance on off-chain processes like bridges and oracles. Ethereum's security is mathematically solid when it's validating on-chain data, but when it starts depending on external systems that operate off-chain, the security assumptions can actually weaken. This is a subtle but critical point because the entire DeFi ecosystem and even parts of other chains depend on that bridge layer to connect data and liquidity. What he's actually saying between the lines is the biggest risk to blockchain's next evolution isn't the price volatility, it's the architectural fragility. That's why tokens that focus on infrastructure and interoperability, like Quant, are becoming more important than ever. If every chain is building bridges and those bridges aren't as secure as people think, then systems like Quant's Overledger, which connect blockchains without compromising their core consensus, could actually become essential. So when people see Vitalik's warning as bearish, I see it as validation that the market is still underpricing the tech that solves these exact problems. The deeper you go into architecture of crypto, the more you see that everything is converging toward a multi-chain world. But that world needs connective tissue that's safe, compliant, and scalable. That's the layer where Quant and similar projects quietly live. Now back to the big picture. You've got the Federal Reserve potentially preparing preparing to cut rates, which means cheap money could start flowing in again. Historically, every rate cut cycle triggers liquidity rotations into high-growth sectors, and crypto sits on the top of that list. Combine that with corporate earnings season and the anticipated Trump and XI summit, and you got the macro fuel that could ignite the next leg of this market. When the Fed cuts, equity rises, liquidity returns, and speculative appetite increases. But this time, crypto isn't the speculative outlier anymore. It's the part of the same conversation. It's the same ETF baskets, the same financial models, and now, even in central bank discussions, they're talking about reserves. That's how far we've come. So while retail traders argue on social media about whether Bitcoin can go to 125 before the end of the week, institutions are taking a very different approach. They're accumulating quietly. They're not chasing candles. They're building exposure over months. You can see it on on-chain metrics. Wallets holding directly between 10 and 100 Bitcoin have steadily been increasing. Exchanges' reserves are in multi-year lows, and the average coin age is rising, meaning more people are holding, not flipping. Even after $19 billion in liquidations earlier this month, the underlying conviction didn't break. That's not a bear market signal. That's resilience. And for those wondering what this means for the broader portfolio strategy, Bitcoin remains the anchor. But this is exactly the kind of environment where the alt rotation narratives start to pick up because dominance is high, which usually happens before capital flows into large cap alts like ETH, QNT, SOL, and XRP. Finally, the XRP breakout could be the spark that sparks the rotation when people see one major altcoin push 30 to 40% while Bitcoin consolidates, FOMO starts to creep back in. And that's when liquidity spreads across the market. Ethereum's warning about validator security might sound technical, but it's a reminder that innovation and risk is always going to travel together. Each new use case pushes the limits of the current design. That's the nature of evolution. It's messy, complex, but unstoppable. And when you combine that technical growth with macro tailwinds, lower rates, geopolitical thawing, institutional adoption, you start to see how the 2025-2026 cycle could end up being one of the most transformative in crypto history. The irony is most people won't even realize it until it's already in motion. They'll wait for headlines to tell them it's safe, and by then the real move will be halfway done. That's why conviction matters. Bitcoin is once again proving why it's the backbone of the space. It doesn't need permission. It doesn't wait for policy. It doesn't even care about sentiment. It just does what it's programmed to do, respond to liquidity and scarcity. So here's a summary of where we stand. Bitcoin's back above 113 and building momentum. XRP is on the verge of institutional recognition through ETF speculation. Ethereum's co-founder just reminded everyone that the security is the next frontier, and global macro conditions are turning favorable once again. The crowd still feels fear, but the data shows strength. That gap between emotion and evidence is where opportunity lives. This is the moment where the smart money quietly builds their positions while everyone else waits for confirmation. History shows that those who accumulate during the fear and confusion are the ones who celebrate during the mania. As these stories unfold, rate cuts, institutional inflows, and renewed volatility, the most important thing isn't about what you trade, but where you trade at. When markets move this fast, precision matters more than prediction. That's why I trade on BTCC exchange. They've been around since 2011, older than most exchanges in existence, and is still standing strong through every market. Whether you're trading Bitcoin, Ethereum, XRP, or even Solana, BTCC gives you the deep liquidity, lightning-fast execution, and the trust that has been tested across a decade of bull and bear markets. And here's the best part I tell all of my viewers. If you use my link down below, you'll get 10% off of all trading fees, permanently. That's real savings that's compounding over every trade. So if you're serious about navigating this new wave of volatility and opportunity, hit the link down below, grab your 10% discount, and start trading smarter with BTC Exchange, the platform built for traders who don't just react to the market, but they read it. I appreciate you guys, and I'll see you guys in the next week.